Right, traders, welcome back to the channel. Here we have the daily chart of gold, one of the most popular markets traded, right? So we have the gold daily chart open in front of us. So what am I going to go through? I'm going to go through how you can actually trade this bullish market and capitalize on some of these bullish moves, right? So without further ado, let's get into it. So our daily time frame point paints towards one picture, and we're just pretty much bullish, right? We've seen all-time highs on gold, so now we need to ask ourselves, how can we get involved and capitalize in this bullish market, right? So a couple of things to draw to your attention when it comes to basic analysis. For those who trade gold, you should have been aware that we had a very large liquidity pool over here. Triple tops over here, equal highs over here. So this red line here is a large pool of, you guessed it, liquidity, right? And so the reason why this is important is because we want to understand that the market moves towards areas of liquidity. That's essentially how IPTA works, right? When it comes to understanding the interbank price delivery algorithm, right, so the IPDA, there's two things that price looks to seek. The first is liquidity, like we've just discussed, and the second is, you should have guessed it, it's fair value gaps, right? So the market will move in a way to target these two things, and that's exactly what we're going to be going over on the daily time frame to begin with. We're going to be using some of our other concepts that we often have to our disposal that are incredibly important, those being structure, right? So let's have a look, right? So we had a huge pool of liquidity over here. Okay, so if we go down to our daily time frame, let's begin to mark out our structure. How am I looking at structure? So the way that I'm currently marking out my structure here on gold is the fact that we have price giving us a shift of structure down here. So what we saw high, low, and from there we've seen a break of structure to the upside, right? So if I just use the dots as an example, right? So we have a structural high, sorry, a structural low here, which I'm going to mark out in black. And from here, we have price giving us another structural high over here, followed by a structural low. Now we've seen price break structure to the upside. So this was our break of structure, right? And we saw price print a new high up here, followed by a new low. Then we had another high. So now I'm going to bring to your attention one thing, right? We have two dealing ranges to work with. Our first dealing range is down here, right? So we simply project the Fibonacci tool from the swing low up to the swing high, and that gives us a zone of premium, which is up here above the 50% level. So this is the premium in P for short, and this is the discount over here. Okay, now one thing that you might ask is, oh look, price didn't get down to the discount, price didn't get down to the discount. Well, the reason for that is because we have the higher time frames, i.e. the weekly and the monthly, that had a huge liquidity pool up here. So the market, and being this is gold being a safe haven as well, the market was posed to trade higher for those reasons. And therefore it's important to be a bit more fluid when it comes to a slightly more complex market like gold, and it's to understand multiple PD arrays. Okay, it's to understand the idea of multiple PD arrays. So our second PD array, and therefore our second dealing range, consisted of this swing low up to this swing high over here, right? So this is where we use the idea of liquidity, fair value gaps, and just the way IPTA works as a whole. So what I want to bring to your attention is the fact that we have a premium up here, or P for short, and we have a discount down here, or D for short. Now, with that being said, this is a fair value gap over here, as you can see, which is pretty much at extreme discount. So it's important to understand this. So if we just project the POI tool over here. So the POIs I typically mark out in gray. So this here represents a fair value gap, right? This is a daily POI over here. With that being said, what we see is we see price tap into this zone perfectly before heading higher. A couple of other things I want to draw to your attention is the fact that now that we've seen a mitigation of a fair value gap over here, right? So this is a fair value gap mitigation, right? What will price seek next? So we see price seek inefficiencies over here, right? So we saw inefficiencies over here, which was filled over here, fair value gap mitigation. What do you think price will aim for now? Well, on the daily time frame, we have a very clear pool of liquidity. We have equal highs over here, and in conjunction to that, we have trendline liquidity over here. So we have pools of liquidity to target, right? So when you're analyzing the market, right, when you're being an analyst and you're analyzing the market, you need to understand what is price going to look for, right? Where's price going to go? Price movement and price delivery, right? The interbank price delivery algorithm operates on two fundamental principles. We're looking for fair value gaps down here, and we're looking for areas of liquidity, equal highs, trendline liquidity, right? Excellent. Great. And this POI over here was essentially the catalyst for higher prices, right? Now, from here, I would just be a buyer of gold, pretty much. I wouldn't really look to sell into this market. Now, with that being said, we could see price give us somewhat of a correction before just heading higher, right? I primarily am a buyer when it comes to gold, and I will be until we see a higher time frame shift, which at the moment looks unlikely. So the question now is, how can you use the lower time frames to your advantage? So what I'm going to do is I'm going to dive down to the 15-minute time frame, which is one of the entry time frames that we use here at Liquid FX. It's not the main entry time frame. I typically use the lower time frames to get involved and to find myself more precise entries, but we won't be going over that now for the sake of the members. That's more so for the private community. But when you have price action in front of you, naked price action like this, how can you analyze it, right? How can you get involved in this particular market, right? Good question. That's exactly what we're going to go through now. We're going to be going over a couple of trade opportunities that you could have potentially capitalized on. And we're going to start here, right? So this is the 23rd of February. So not too long ago from the date of recording, which is the 12th of March. Okay, so how does price behave from a session volatility and timing standpoint? That's very important because essentially ICT works on two key parameters, right? You probably guessed it. It's time, then price. So it's always one, then two, right? In that order, one, then two. So it's important to understand this. Time and then price. Always. Repeat after me, everyone. Time and then price. These are the two most fundamental driving factors when it comes to determining successful entries using ICT concepts. So with that being said, we need to understand that there's a time for everything to happen, right? We expect the London and New York or New York session to make the low of the day. It's typically the London session more often than not, right? But what does price do before the London session? It consolidates, right? So this is the accumulation. And why have I highlighted the accumulation in gray? Now, the reason why I've done that is simply because this is the Asian range over here. So the Asian range has a responsibility, right? The Asian range has a timing as well. The time is very important. So let's just get the time out of the way. The time of the Asian range is from 8 p.m. to midnight Eastern Standard Time, right? So wherever you are around the world, it's important to calibrate this. 8 p.m. to midnight Eastern Standard Time represents the Asian session range. Now, the Asian session range with this timing has a purpose. It simply is an accumulation of the market and therefore it builds orders. Now, it builds orders. So just going to bring your attention to a schematic we have on the right. This is the Asian range over here. Now, when it comes to the Asian range, there's 2 points of interest that we're going to be looking at from the Asian range. Two lines over here, right? We have a high line over here and we have a low line, right? Representing the Asian high and the Asian low respectively. So this is the Asian range and we are interested in that high and that low, okay? Now, the reason for that is because now we see price tear down, giving us this move over here. Remember, people, the low of the day is typically formed in the London session, right? So this is what we call the ICT Judas swing. Now, what determines a Judas swing, right? So when we see price tear down, sweeping the Asian low, then giving us a displacement in structure. So this is what we see over here. We see price breaking structure after sweeping the Asian low. So this arrow here represents that clear break of structure, shift to the upside, okay? Just like over here, right? So the ICT Judas swing, or simply the Judas swing for short, occurs after a break of structure to the upside or a downside if we're looking at a bearish case, right? But here we're looking at a bullish case, and this is the ICT Judas swing. Now, what validates a Judas swing, right? How can you find a high probability Judas swing? Because that's a question I get in my private mentorship. They say, "Oh, Liquid FX, how can I identify high probability Judas swing?" Right? So the way to do that is to first of all understand which direction the Judas swing is going to form in the first place. Is it going to be a bullish Judas swing or a bearish Judas swing, right? So this is a bullish Judas swing, and the reason for that is because it sweeps the Asian low before heading higher. So we see price head down. So this is a form of manipulation. Remember, Judas swing is simply manipulation. So the first thing to understand is what type of manipulation. Are we going to see bullishness or bearishness? That's very important. That essentially comes down to understanding your higher time frame narrative. Are we going to see bullishness or bearishness, right? So that's the first thing. The second thing you want to look for is timing. Like I said, the low of the day will very typically occur in the London session. Now, can it occur in the New York session? Yes, it can. Of course it can, right? Those are the two prime sessions to look at, right? They're very specific times of day that we look for the Judah swing, right? So I won't cover that in this video, but to give you guys a heads up, it's typically in the London session or the New York session. So I recommend doing some back testing, forward testing, and live trading to see where that Judah swing occurs. But a very, very big clue to your success in ICT relies in, yes, finding the narrative, number one, but number two, it's essentially the timing. When will the Judah swing occur? The third thing we're going to look for is what we want to see: a clear shift of market structure. So we want to see MSS or market structure. We also want to see price leave a fair value gap, right? These are the four things that we look for when it comes to it. A, successful Judah swing in price. This is what we're looking for, right? So I really recommend having this in your notes, right? A key Judah swing will operate with these four rules: understanding what the Judah swing will do, when it will do it, and it has to give us a clear break of structure, leaving a fair value gap. This is very, very important. So if I just get rid of this now, I'm trusting you've all made notes on that. We've seen that here in price. We see price rally down before giving us a clear break of structure. So now we need to identify which fair value gap are we going to enter off. Okay, so now we have two fair value gaps over here. We have one over here. We have one over here, which is what ultimately held, right? And we also had one below. So I know what people are going to be asking. People are going to be asking me, oh, liquid effects, why aren't you going for the bottom one? Why aren't you going for that bottom one? Well, the truth is, there's actually nothing wrong with the bottom one, right? There's actually nothing wrong. The question is, well, how do you decide which order block it's going to get to? How do you decide which order block it's going to get to? The true answer is you never really know. So how can you get around this? What I would recommend from a trading point of view is what I'll do is I would set an order on both zones. So I'll set an order here, right? And I will set an order over here. So I would set both these orders. And what I would do is I would simply reduce the risk. So if you're a trader who trades 1%, I would actually put 0.5% risk over here. And I would also put 0.5% risk over here. For obvious reasons, if price were to head down lower, yes, this would be a loss. But of course, that loss with a higher RR is made up. Okay, that would be simply my way of going about it, right? Simply put, there's no other way around it, right? But this is one example of how you can get involved in a nice 1-2 or even a 1-3. I believe this trade ran up to a 1-2 stupid RR, right? Stupid RR. So it goes to show you that if you just held a partial, if you had targeted this high over here, that gives you a 1-3, just like this. So this here gives you a 1-3 over here, right? This was a 1-3. So what I would do here from a trading point of view is I would take off 80%, right? Because we're bullish overall, but you have to pay the trader. So take 80% off volume over here. And as you can see, what did this trade actually run to in the end? This trade ran to, I think, 1-20 or 1-21, 1-25. So it was a monster trade, right? Are you going to hold that trade full volume is the question. Well, the answer is no, you're not going to hold the trade at full volume because that would be a stupid thing to do. The most important thing to understand is to pay the trader consistently. Take partials at 1-2, even 1-3, depending on your risk appetite and depending on kind of your personality as a trader. Very important to understand, okay? So this is one particular buy setup that presented itself towards the end of last month. So that's one particular area you could capitalize on this rocketing higher time frame sort of market, right? We see the market giving all-time highs. So how could you get involved, right? Here's one good example. A second good example I can think of, I can see on the chart, sorry, not think of, is just over here. Look at how price follows the exact same logic. So again, we're going to start off with our schematic over here. So our schematic consists of an Asian range. We consist of a Judah swing, a shifter market structure, and we enter off a fair value gap. So that's typically how the schematic works, okay? We see price giving an Asian range over here, Asian range in gray. We see price giving a London Judah swing, again, 10 a.m. UK time, low of the day. London Judah swing, right? London Judah swing, time and price, right? London Judah swing over here. London Judah swing, London Judah swing. I can't reiterate that again. I'll keep saying it. London Judah swing, London Judah swing. If there's nothing you got from today, remember time and price. London Judah swing, London Judah swing. Okay. And now look what we aim to do. Look what we aim to do now. Now we simply key off a fair value gap, right? So we key off the nearest fair value gap. To keep things very simple, guys, key off the nearest fair value gap. So here we see a fair value gap just over here. No, sorry, this one got filled. So we saw a fair value gap just here in this region. So this is our fair value gap over here. Therefore, our order block lies here. M15 order block that we can use to enter off, right? M15 order block just over here. Okay. Notice how price had given us a fair value gap just over here. So if I label that in here, we see price giving us a fair value gap here in blue. A fair value gap is simply where we want to enter off, okay? So if I just draw your attention over here, the fair value gap over here is filled. Look at the precision the market comes into, everyone. Fair value gap over here. Look at the precision that we see over here, right? So we want to enter at the start of the fair value gap to ensure we are in the trade, right? Now the question now becomes, oh, liquid effects, where do you keep your stop loss? Where do you keep your stop loss? Well, a safe stop loss is just below that Judas swing, right? So having your stop loss just below the Judas swing, right? So you want to have a safe stop loss, right? Safe stop below the Judas swing, okay? Again, this trade was, I think, there was a news catalyst over here, but nevertheless, trade ran to 1 to 5 beautifully. And if you had held a small partial, you can see the overall return on that trade, right? So if you're somebody who's trading gold, right, you need to understand ICT concepts are an absolute gem, right? ICT concepts are an absolute gem. So what topics? So now what have we been through today, right? We've essentially been through the XAUUSD on the higher time frames. Okay, so first of all, we've looked at higher time frame analysis using structure, fair value gaps, using liquidity, structure, and fair value gaps, right? So we've looked at higher time frame, we've looked at liquidity, we've looked at fair value gaps, we've looked at structure. These are the foundations to your trading, whether it's SMC or ICT or liquidity inducement theorem or whatever it is you trade. If you can stick to these basic concepts and apply them in an AMD time and price based theory algorithmic systematic approach, you have no reason not to make money in these markets, whether it's gold, whether it's the S&P 500, no matter what it is. If you have the mindset and the basic technical tools, you have no reason not to make money. And on that note, we just want to say that at Liquid Effects, we're offering free one-to-one sessions for anyone who's interested. So if that's something that interests you, feel free to contact us on Twitter or Instagram, and I'll be more than happy to get back to you and discuss whether it's a good fit. But until then, happy trading and see you at the next one.